Hello everybody, this is Lara from Pure Elliott Wave with an update for my analysis for XDC Network. I just recorded this whole video and my file was corrupted, so I'm doing it again. Joy. So that's going to be pretty quick because I've actually done all the analysis. So my last analysis expected overall upward movement. That's exactly what's happening. It's starting to come with some strength. I'm going to label a third wave complete up here. The bigger picture for XDC Network I have here is really bullish. I have a 5 steps up, 3 steps back, completed basic Elliott wave pattern. When 5 steps up and 3 steps back are complete, then the pattern repeats again. So we're looking for another 5 up and another 3 back. And the bigger picture will be labelled cycle 1, 2, 3, 4, 5. And here's how you can use an Elliott wave rule to make your decisions regarding this market or a market that's in this part of the pattern at this time. One of the core Elliott wave rules is wave 4 may not enter wave 1 price territory. So anything bought during wave 1 or wave 2, anything bought while it's still within wave 1 price territory can be held for the gains of 3, wait throughout 4 to hold for the gains of 5. And this is why it's so important for cryptocurrencies. The fifth waves are almost always quite a lot longer than the first waves, particularly a fifth wave to end a third wave 1 degree higher. So here, even within a first wave, primary 5 is 0.15141, longer than primary 3, which was 0.140834. For a third wave, the fifth wave is usually a lot longer. Here, intermediate 3, 0.04305, intermediate 5, 0.117045, many multiples of intermediate 3. Now that's really typical for a fifth wave to end a third wave 1 degree higher. What have we coming up next? We've got a fifth wave to end a third wave 1 degree higher, this time at an even bigger degree. So I expect primary 5 to end cycle 3 may very well be a very long, strong and explosive upward movement. Here's another really good thing about those fifth waves. This fifth wave moved this in just 3 weeks, whereas the third wave took 10 weeks. The fifth wave will move price many multiples in a very short space of time compared to the third wave. A fifth wave to end a third wave 1 degree higher is the quickest, greatest profit in any cryptocurrency chart that I've ever seen, potential profit that is. So holding throughout 3 and 4, holding throughout 4 and to try and get those gains of the fifth wave could turn out to be a really good idea. The channel here that contains 2 is very obviously broken. Let's get rid of that. Now I'm going to label this as within primary 1, within cycle wave 3, with intermediate 1, 2, 3 and 4 complete. Let's look at this in the daily chart. Here's intermediate 1, intermediate 2, a deep zigzag, intermediate 3 over in, let's see, 36 days compared to 130 days for intermediate wave 1. Intermediate 3 was 0.0033, greater than 2.618 times the length of intermediate 1. There's a nice Fibonacci ratio between those two. So I'm going to have a go at a target for intermediate wave 5 at 0.15895. Intermediate 5 would reach 1.618, the length of intermediate 3. I'm not going to use equality in length with 1 because that would see it truncated. The next target for a normal market would be 0.618, the length of 3, but this is a cryptocurrency, so I'll expect the fifth wave is fairly likely to be longer than the third wave. Now, this is a fifth wave within a first wave, so not necessarily going to be the longest, strongest portion of primary wave 1 because it's not a fifth wave of a third wave 1 degree higher. For the short term, it looks like intermediate 4 could be over here as a double zigzag, relatively shallow, still an 88% correction. Actually, it's quite deep. It's an 88% correction, whereas intermediate 2 was a 51% correction. So there's alternation in structure, double zigzag deep, single zigzag shallow. If it continues lower, intermediate 4 may not move into intermediate wave 1 price territory below 0.045346. If we move the degree of labelling within intermediate 3 down 1 degree, this could be minor 1 and minor 2. Minor 2 may not move beyond the start of 1 below 0.0300104. So that's my final invalidation point for the short term, or for the long term actually, for XDC Network. And you low below that, and it'd be in pretty troubled territory. This looks like a pretty good third wave, and it has a beautiful subdivision. I did record it when I figured this out. but that video file got corrupted, so I see 1 2 1 2 3 4 3 4 5. Let's get this down on the right low there. A little bit of a thing I want to point out to you here. I see a lot of people online getting this so wrong. I can see an inverted head and shoulders here. Here's a head, right hand shoulder, left hand shoulder. The peaks between the head and the shoulders, I think you should probably call those the armpits, wouldn't you? This is how you draw your neckline. Or is this the neck? Anyway, whatever it is, you have to draw the neckline from this peak to this peak. And I see too many people doing this, something like this, and they might do something like that, and they're just kind of randomly drawing a line. No, you have to be pretty accurate. You've got to actually anchor it. Let's extend this back on out. That is how you draw your neckline. The neckline with a more shallow slope will have a greater technical significance. A more steeply sloped neckline will have a lower or lesser technical significance. Identify your breakout point, and you wait to have price close beyond the neckline. And then you calculate your target from whichever is the greater from the head to one of these peaks. Whichever distance is the greater from the breakout point, that's your target. That target was met and exceeded before this price movement turned around and we saw this downward movement. So that would have been a really helpful pattern to identify and to use that technique to calculate your target. So hopefully someone's learned something here about how to use an inverted head and shoulders. Draw your neckline carefully. Identify your breakout point carefully, wait for price to close beyond it, calculate your target. What's happening now? Price is moving lower. This looks like a pullback within an ongoing upward trend. Price very strongly supported by volume pushing price higher. What's our bottom line? What do we need to see to identify that this pullback is over and the next wave up is going to begin for XDC? Let's get rid of that neckline, that's served its purpose. Look for next support, probably about 42. There's resistance here now, probably about just under 7 cents. As price falls, volume is declining, price is falling of its own weight, but it's upward sessions within this pullback which do actually have stronger volume than the immediately predecessor downward sessions. Volume strongly pushed price higher up to this peak. This is strongly bullish, and now volume falling as price falls. This is also somewhat bullish, but doesn't tell us if this pullback is over yet. On balance, volume is declining. There's no new range, no signal. ADX is declining after telling us the previous upward trend reached very extreme, above 60 and above both DX lines. It's still well above both DX lines, so the pullback could continue further to pull ADX right back down, back into a point where it's going to give us a strong signal. Doesn't have to do that, but I'm just saying that would be really nice to see if it did do that. So far, no clear trend, because ADX is declining. There's a little bit of bullish divergence from this peak to this peak, here to here, for price on a closing basis with RSI after RSI reached fairly deeply overbought. So unsurprising, we're getting a pullback. RSI is still in positive territory. It's above 50. It hasn't even managed to make it down into negative. So there's quite a bit of room to go before this pullback may end. Likewise, money flow is in positive territory above 50. ATR increasing quite strongly with upward movement, volume pushing price higher, range increasing, typical behaviour for a cryptocurrency during a bullish run, rather atypical behaviour during a counter trend movement in a bear market. So this really does look like a bullish market for XDC. Still increasing slightly as price moves lower. That could be due to the lag. This is based on a 14-day average. Now, because ADX tells us there's no clear trend, we revert to a model of stochastics plus support and resistance. Stochastics is just entering oversold, and price is not near support. So there's quite a long way to go for this pullback before it could be over. We don't have any evidence it's over, so I will assume this remains the same until proven otherwise. Assume it's probably going to keep going lower until proven otherwise. What's proven otherwise? Use this channel. Remember my conservative definition of a channel breach, a full daily candlestick in the opposite direction outside and not touching the channel. Here we got a bullish engulfing pattern that did have support from volume, but price is still within the channel. So the absolute bottom line is we need a channel breach, and I want to see, once the channel is breached, then I want to see upward sessions with push from volume, and then I'll have confidence this pullback for XDC is over. Before I go, a quick reminder, the most recent new addition to our regular analysis at pureelliottwave.com is daily gold analysis. This is a membership only product. So if you're interested in investing and trading in gold, we're providing excellent Elliott wave analysis for gold that's been remarkably accurate for the last few weeks. We've predicted this fall in price for gold. So if you didn't know that that's what gold was going to do and you were trying to trade it the other way and you've lost money, you didn't have to do that. You could have had our analysis. Thank you so much for watching. Thank you for your support, and please don't forget to like, make a comment and subscribe to help me grow my little YouTube channel.